everybody, Allison here, and I am the Director of Risk Tolerance as well as an Options Specialist here at Simpler Trading. And in this free video, I am going to talk about how I've been trading for the overall year, some of the strategies that I feel like I have been using that have been working out very nicely, as well as what I think looks like a potential trade idea going into the next few trading days. So let's talk about that. So certainly for those of you who have been trading this year, it has been a very volatile market environment, right? We had a beautiful run up last year. Everything was looking good. And then this year, things weren't quite holding up, right? We finally started to see a pullback. Certainly, there's news out there of the Fed tightening, there's inflation to deal with, there's, world stuff happening with, Russia and Ukraine, so many other things going on. So there's a lot of weight on this market right now. But were there clues on the technicals? Well, yes. One of our first clues actually, which I know seems like it's a ways away, but it was on the monthly chart. And back in October of last year, we started to see the momentum bars try and shift into a red bar. They kept going into the end of the month and just barely eking out a green bar, right? Just barely getting up to get to print a green bar. But we kept seeing red bars flash going into the end of the year. And finally last month, we started to see one print. On top of that, we also started to see back-to-back divergent bars, which is usually an overall sign of consolidation. So the fact that we're having momentum finally starting to show some exhaustion levels, right? It's still very early in the month, but if we close the month printing this cancellation signal, that's not going to look too good. That either is signaling a pullback or could start to signal some chop as well. We can see the Bollinger Band starting to flatten out. So, we've had a beautiful run up, and it wouldn't be too surprising if the market started to pause here just from the technical standpoint, not even everything weighing on the market in general, but just from the technical side of things. So, that's one of our first clues that we might have started to see a bit more of a pullback this year. Certainly, as we know with sell-offs, we can start to experience a lot of market volatility. And for swing traders, that can be really hard to deal with, right? You're trying to figure out where the bottom is to potentially buy. Certainly when things really chop like this, both down and up, you're like, should I get short? Should I get long, right? It can kind of make holding overnight trades a little bit more difficult. So one of the things I did in my trading plan, which really helped me out, was switching from a more swing-based trade to doing more intraday style trades. Volatility can be a great market environment for intraday style trades as well as for the profit recycling strategy. So for my true intraday traders, right? This is an example of a trade I did over in my main account. But you can see it was going right into the close that day. I had a really nice setup, so I threw this out there. It was the 45.40, 45.25 put. I jumped into it. Actually got a favorable fill at $1.40. I was, put it in at $1.50 because I was just trying to get filled on it. Everything looked good on it. And you can see here, I put a cover order out there at 5. 4 minutes later, I got that fill. 4 minutes later, right? It is a great environment for doing some intraday style trading because of that volatility being spiked into it. So, that was a pure intraday trade. Now, for those of you who know me, y'all know that I typically don't do pure intraday trades where I'm opening and closing within the same day because a lot of the accounts that I like to trade are under 25,000. And of course, those can be flagged by pattern day trading rules. I hate flagging those, right? I very rarely will do a pure day trade because of it. I like leaving those out there just in case I make like a mistake, right? Opening a trade in one account that I meant for another, or, maybe meant to do a different spread width or accidentally clicked the puts instead of the calls. You guys understand, right? So I usually don't like to use my day trades because I like to save them. So my way of getting around that, but still taking advantage of the intraday moves is by profit recycling them. By profit recycling, I am able to lock in profits without necessarily triggering that day trading rule. So these were some trades that I actually took in the profit recycling mastery not too long ago. These were on the 20th. This first trade we entered, we jumped into at a $2 cost basis. We profit recycled and covered it at 3. So we had locked in a $1.05 profit on the trade and set up a bonus trade. We did another trade going into the close that day, 2 in that account. You can see here we opened it at 233. Less than 14 minutes later, that 2 was able to be a quick locked in profit, setting up for a bonus trade for that next day's expiration on an SPX. So intraday moves are a great way to take advantage of this market environment. Another great way to take into consideration this market is by doing broken wing butterflies. Now, for any of you who follow along with my $500 challenge, this is something I, share out to the simpler trading rooms. This is something I post to Twitter. I share it on Twitch for my $500 challenge. Then you know, right, that this has also been a really great environment for broken wing butterflies. One of the trades we took into the close, let me find it here. Here it is. So y'all know that broken wing butterflies, there we go, have been amazing in this market environment. One of our last trades for January in the $500 challenge was this broken wing butterfly here. We put on the 4500, 4510, 4515 call. We got filled at a $1.50 debit going into the close. And the idea behind this trade when I opened it was to try and let it cash settle if possible. I might have day traded it, but as you guys know, like I just said, I really try and not use my day trades when I don't have to. So the idea behind this is that we are going to try and let it cash settle. And broken wing butterflies have been very forgiving in this market environment. Let me move this back over really quickly. So that was for January 31st expiration. On the 31st, we ended up closing at 45.15 and 55 cents. So, if you had done a standard wing butterfly, then that trade might have hurt you a bit if your pin was at 45.10 like ours was, right? And maybe you did a 5-point spread, right? Something like that. Or if you did 4,500 for the pin and did like a 10-point standard butterfly, that close would have ended up hurting you. Well, the volatility in this market I have found has actually been working very nicely for broken wing butterflies because on the one side of things, butterflies are usually inexpensive trades. They're certainly typically a lot cheaper than just buying a long call or a long put, and they are cheaper still than doing a more directional trade like a vertical debit or a vertical credit spread. And as a lot of y'all know, butterflies can also allow for some great profit potential. On the other side, by doing a broken wing butterfly like we did, where the debit spread side is greater width than the credit spread side, it also allows for the forgiveness factor of a volatile move. Meaning if we go with the right direction where we think the market is going to happen, which in this case, right, we are looking for it to go higher into the close. But because of that volatility, we're not quite sure if we'll exactly get the pin or if this thing will just keep trekking along, right? As we've seen, right? Sometimes it dies off into the close, sometimes it goes right up into the highs. So by doing a broken wing butterfly, we keep our cost limited. We still keep our risk very small, but it can still allow for some nice profit potential. So for example, on this trade, we closed just 55 cents technically out of the money on our long strike. But because we did it as a broken wing butterfly, it still overall allowed for a 350 profit potential on this trade. And as you can see, right, we did take a loss last month too, but overall we still netted for January that we are up $285 for the account, right, off of $500 of capital that we are trading out of it. So very nice market environment for the intraday moves, very nice market environment for broken wing butterflies. And so it's been working really well. So let's go on now to what's a trade idea I might be able to take advantage of currently. Well, overall, we've been getting technically a nice bounce up in the market, but for those of you who have been paying attention, and I am recording this Wednesday night going into Thursday, but Wednesday we ended up seeing Facebook earnings come out, and they're not looking too good, right? Currently, I can bring this over now. The market is, is right now, futures are down, right? Just here's really quickly pre-market, and we can see everything is pointed lower currently. So that's not looking too good at the moment. That can obviously change by open tomorrow. But let's say, right, the pre-market's valid and we're not looking too good here, right? Daily resistance ends up holding and we start to see ourselves selling off. One, that's an opportunity for volatility and therefore some intraday moves to take advantage of. But two, right, it means that things might start to reverse. Now, keep in mind, the market still has Amazon earnings. If Amazon does well, maybe it will kind of keep us around this range. But if things look like they're selling off, as of right now, I would be leaning towards, if we're not going to do a pure, intraday move, which obviously we don't know what the setup is right now for that because the markets aren't open. But if instead we are looking for something maybe into the end of this week, or maybe you could even push this out a little bit if you want to, if you think we're not really going to sell off until the next week. The idea is if we end up holding resistance here and pulling back, there's a good chance we could either go down towards 4,500 again as a psychological level, or maybe even down to 4,440. Now, 4,440 is a pretty special number to me because not only is it currently the 10-period simple moving average on the daily chart, but it is the price resistance level we kind of saw ourselves testing last week whenever we were trading down in this range, whenever we had the Fed announcement Wednesday, right? 44.40 was kind of that line in the sand that we were having a very hard time breaking above until we really start to get into this week. So typically, right, what can happen on pullbacks after we break resistance levels like that is that we can go down and then retest them as support to see whether or not they hold. So the trade idea to consider here would be to do something like a broken wing butterfly to play to the downside. So for example, here is a 15-point broken wing butterfly, and right now the cost on this is $235. The pin is at 4,500, a very nice psychological level. As we know, if the market sells off, usually it can pick up that volatility. So it seems like it's a ways away, but with the pre-market already being down some, and if we do continue to sell lower, I think that's a very attainable target by the end of the week, certainly. Might even see it tomorrow with some of the volatility that we've had. But at the same time, right, with the volatility and what I'm talking about, by creating it as a broken wing butterfly, it still gives us that forgiveness factor. So let's say the market does go down to that 44.40 level to test instead. Well, by getting in at a 230 cost basis and having it be a 20-point wing spread on the debit spread side of the butterfly and a 15-point credit on the credit spread side of the butterfly, right? The difference between those two widths is 5 points. So if this goes completely in the money, we take that difference in the spread width of 5. We take away from that our cost basis of 230, and it still allows for a 370 profit potential. Certainly still above 100% return on our initial risk if this thing really starts to drop off. And keep in mind, guys, you can play around with what you want for a spread width. Let's say you want a smaller capital cost. Maybe you do the 15-10 point spread, right? That's only about $1.70 currently. Or perhaps you want a greater profit potential if it does go completely in the money. then you could consider something like a 20-10 point butterfly, right? That's about a 320 cost basis, so it's a little bit more. But if it goes completely in the money, it still allows for a 680 profit potential. Once again, not a bad risk versus reward there. And of course, if you get the pin on these trades, you have an outstanding max profit potential because you have a nice wide width butterfly overall. So those are the trade ideas I would consider playing if it looks like the market is really starting to sell off tomorrow, right? Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.